Nothing in this recording is intended as investment advice, and the people in this recording may hold positions in the companies they talk about. Do not make any investment based solely on a tip or recommendation. Please do your own research.
Hello and welcome to Zach's Traders Cafe. Today I'm joined by Mark Routh, who's CEO at Prospex Energy. How are you today, Mark?
Yeah, I'm good today, Zach. Thanks for having a chat with me today.
All right, a 10-year extension to a license sounds like good news. Maybe you can run through that.
Yes, the El Romeral concessions in southern Spain, near Carmona, which is near Seville, produce gas into our power plant, which generates electricity and which we sell on the grid and the spot market. These concessions officially expired on the 28th of July, 2024. We always expected this concession to be extended. We actually applied for the extension in May 2021. The draft royal decree was sent to us in December 2022. And on the 4th of April 2023, the Council of Ministers was sent the draft royal decree to be approved. It didn't get signed until the 24th of July, this Tuesday, 2024, literally 4 days before the expiry of the concessions. Now, so people have asked me, were you worried about this? We'd actually taken legal counsel from a top law firm in Madrid, which said there is no legal basis by which the government cannot sign this because the ministry had drafted the royal decree to approve this. So it was just a question of when, not if. So I was confident it was always going to happen, but leaving it to the last minute was very irritating, frankly, for planning things. But we always knew it was going to happen, and it is very good news that it's there, and the RNS states why it's good news, because we can continue on with getting ready to drill the 5 new wells that we're going to drill on the concessions.
I mean, but just be diplomatic about it. These days, wherever you are, whether you're in Spain or the UK, it's actually disproportionately a win, disproportionately positive a win if you get anything which involves fossil fuels or something which is maybe anti-net zero. So it is actually, 5 or 10 years ago, it would be a routine thing, but now it's a little bit of it's a bonus in that way.
Yes, it is actually, that's very, very well said, Zach, because against the prevailing wind that we have against us, fossil fuels have got this bad image. But the trouble is that all the European countries, including the UK, need to have natural gas. We can't switch to renewables overnight. Natural gas has been recognized by the EU as a transition fuel. It is very important that we continue production, and the indigenous production of local onshore natural gas has a far lower carbon footprint than importing LNG from Abu Dhabi or America into Europe. Spain is the largest importer of LNG of any European country. So not approving this extension to develop onshore indigenous gas would frankly have been hypocritical.
And I suppose it's also the case that if you're importing natural gas or fuel of any kind, you're basically displacing the carbon footprint, but the carbon footprint is still there wherever it comes from, wherever the source is. So it's a bit of not a helpful thing to do in the long run.
Well, this is where actually the total supply chain of natural gas, when it gets produced, for people to say that it's somebody else burning it is all very well, but you've got to look at this as a global issue we're facing. So you've got to look at the global carbon footprint. So just importing it from someone else and saying, oh, well, that's somebody else's emissions doesn't actually help the argument. We actually need a level playing field on this argument, because the other thing is, with the renewable industry, that is not exactly a net zero industry either, but let's not get into that one.
All right, so getting back to Prospex, your shares are up 67% so far this year, which is nice. The market finally appreciating you. I believe that from previous RNSs and my memory that you are debt-free, so everything to play for now.
Yes. Well, can I be sort of brutally honest about Prospex? I mean, the assets we have, we've got two producing concessions, one in Spain and one in Italy. The concession in Spain is producing a very small amount of gas, and we're generating a small amount of electricity. The biggest asset the Prospex has is in Italy, where in Selva Malvezzi we are producing a very healthy income from the well that is producing there. And that is, frankly, the largest proportion of our income and our cash generation. The good thing is, as you said, we are debt-free, and all our overheads and our G&A salaries are covered from the income that we have from production. But in both Italy and in Spain, we are in the permitting process to drill 4 more wells on the concessions which are already granted for production in Italy. We're waiting for permits to drill those 4 wells. And we've got the permitting process in Spain to drill the 5 wells on the El Romeral concessions, which now we have the extension. Is just a matter of time before the well permits come through and we can get drilling, which will bring the capacity of the power plant from 30% up to 100%, which will mean more income from Spain.
And do you think the market is, let's say your market cap's 27 million, but obviously you'd like it to be much more, but is the market waiting for more line of sight on production, and then it will say, okay, you're worth 100 million or 200 million, and in the meantime, you've got a sort of holding pattern valuation, which is basically the same as you've had over the last couple of years?
Well, that's right. There's the analyst reports that was reconfirmed yesterday has our target price at 18p from VSA Capital. That doesn't factor in much, if anything, for the valuation of our assets in Spain, which seems a bit unfair because now we've got this extension. We are going to be drilling more wells and producing more gas, and we only need 2 of the 5 wells to come in to get 100% capacity in the power plant. And then the other 3 wells, we can either sell the gas locally or ideally connect it to the local grid, which traverses the concessions. If you look at our corporate presentation, there's a good map there showing literally how the local Enagás pipeline, the 26-inch pipeline, which is a high-pressure gas grid pipeline, traverses the concessions. So access into that would be relatively cheap and easy.
Just finally, how much is the valuation of Prospex related to, the underlying commodity prices?
Well, I think that is probably the main reason that our share price has been increasing this year. We're seeing that the TTF gas price, that's the quoted on the from the TTF in Holland, that is the gas price which is indexed from that when we sell to BP Gas Marketing in Italy, our gas is sold there. We're actually selling at a premium to that number. I looked at the quote today. It's 33 euros per megawatt hour, which is about 75 pence per therm. We sell as a slight premium, about a €2 premium, €2 per megawatt hour premium to the TTF. So our gas, the average gas price last week we sold in Italy was 35 euros per megawatt hour, and we're producing 80,000 standard cubic meters a day gross. So we're 37% of that. So it's largely due to the increase in the gas price, because Italy as well needs gas. And in Italy, the ministry is been renamed the Ministry of Environment and Energy Security. So energy security is high on the agenda with the Italian government.
Okay, well, it sounds as though progress has been made. You've got your license extension. We'll see how you can carry things forward. But in the meantime, Mark Routh, CEO at Prospex Energy, thank you very much indeed.
Thank you, Zach.
Thank you for listening. Remember to visit our website for more news and other podcasts at www.share-talk.com.